The markets have been moving down, but some sectors and individual companies have been showing great trading opportunities. We're also looking at some companies that are trawling out bottoms and setting themselves up to be the next leaders when that market eventually turns. Gary Glover's been looking through the analysis of both the 25-year, the cycles, and then drilling down on the indices to then identify which companies he wants to be trading within the indices. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
So the markets have been coming down. We've been seeing that. You did call out a couple of weeks ago. Anyone wants to look, they can go back and have a look at the videos in the last couple of weeks and the Tuesday reports where you were looking for it to crack a marginal high. You've talked about these resistance levels. And then you talked about the 2025 blueprint where you look at the 5-year cycle being 2025, 2015, 2005, all those years ending in a 5, and other cycles as well, to sort of point out how that would help you find sort of a target to look for in this current retraction that we're in or pullback. How's that blueprint looking? What are you seeing on the charts? Sort of how do you see the indices going at the moment?
Yeah, I mean, it's a big move, Chris, isn't there? I was looking yesterday, just through a different watch list of stocks that I follow, and there's two down the bottom there. We're like, can't remember what it was now. Yeah, we're seeing plenty of stocks that are off 5, 10, 15, 20% in a single day. So there's some really big moves there. And we're seeing some, there's EPs as well, which we've followed the last couple of weeks. Some of those have popped up, 5, 7, 10, 13, 14% moves as well. So definitely feels like the volatility is, the moves are getting bigger individually here. So we're definitely seeing, I guess maybe that it's sort of something, I guess more in line with the 40s and 70s, those sort of higher inflationary type markets there, where we saw, the market sort of went sideways there, most for those sort of, I think sort of 4 or 8 years, with, when they had higher inflation, they did see big moves, big swings up and down there. So, yeah, just interesting seeing the size of the moves within individual stocks at the moment. Can be a bit treacherous and a bit exciting at the same time. So, but yeah, I guess from an index point of view, the NASDAQ there did sort of close above 20,000 there, but only just there, and then it has rejected here again. So I think we're seeing some clear rejection there again on the NASDAQ. Did see an increase in volume as well. So even though I've been sort of floating here, and I did kind of warn there last week that, oftentimes here in these 50 years that we do seem to see these broadening patterns there where we'll sort of go to a slight new high, retest the high and then reject it. So we've seen it, with a lot of the indices there recently as well. And in the past there, when I look through those 50 years and post-election years, I just saw that broadening pattern is just so ever present in the first quarter of those years, to the point where I think might be something like 85% of the time we saw a broadening pattern, and even some of the failed patterns still sort of had a move. If it wasn't like, I think, I won't go too far ahead here, but so just on the NASDAQ, it just looks like it's going to broaden out here. So more than likely, we're going to basically come back and take out that short-term low. And more than likely, if I look at that sort of old high there, that's probably the obvious area of support. Yeah, right there. So in terms of sort of fulfilling the usual, first quarter, 50-year broadening pattern there, that would be sort of bang on to sort of come back to that level here. So just tells me we might retreat in here. What I thought was pretty interesting there, you look at that, I think that S&P 500 chart, I did try and sort of add it in there.
Well, the one at the end.
No. This one here, actually, you've got there. So, sort of got it in little writing there, down the bottom there. But there's a definite theme in these 50 years. But apart from that sort of broadening pattern, we've seen like a March low in a lot of the time there. So like at that 35, 45, 55, we saw like a broadening pattern just like this, and then have a March low, and then basically rally for the rest of the year into the end of the year. Now those were pretty strong sort of markets. Some of the other markets here probably not as bullish as 35, 45, and 55, but 85 and 95, they were still major lows. So we still basically had that broadening pattern early, and then we had that that sort of rally there up to August, then pull back in October and finish the year high. So we had that normal pattern there, which I think was seen in 2005 and 2015 as well. So just seeing lots of March lows here, to the point where I actually couldn't find in the 50. I couldn't find one when there wasn't one. I try. I was sure, surely there's a ZSO, but
somewhere.
yeah, but look, maybe I got to go back further. Maybe I got to go back further than 100 years. I just couldn't find anything in the last 100 years where we haven't seen that March low there. So sometimes they can sort of extend out to early April, but yeah, it's either early, and I think 85% of the time, Chris, that March low is the low for the year, and only about 15% of the time there, is it actually just a minor low? So, as in it gets broken, but doesn't get broken until the second half of the year. So, yeah, I don't know. All the historical data points to a March low of sorts. Or maybe it could extend out to early April, but there should be a bounce after March here. So just whether this can sort of power on here and get going there. So, but yeah, that's the normal pattern, is to sort of recover and stuff and push on there. I don't think it's going to be like the 35, 45, 55 periods where they're pretty aggressive, because we've already on the back of had two pretty good years there. But the 2005, like 2015 sort of setup there is more sort of, the classic sort of post-election year sort of cycle, where we have that expanded first quarter, bit of weakness, rally back up to August, have a bit of a congestion into October, and then finish the year strong. And that's sort of the normal cycle pattern there. So that's the way the way the market seems to be sort of setting up there. And it's, yeah, so it's just interesting there again with, the S&P, such a big level that too, I kept looking through those expansions again. I thought, because obviously last week we started to see some index looking like they might want to sort of threaten and pull back there. They'd sort of congested under the high, were looking like they wanted to go higher there. But now when I look through all the patterns, I thought, oh, this is such a strong, those sort of, those 100% expansions, the 200% expansion. And as I sort of kept looking through the US market, particularly the S&P 500, which I think is just a better roadmap, because they've got 500 stocks there, a bit more history there, and it doesn't get sort of too out of whack. But that was just, that was showing up every cycle I could find was telling me this is going to be a wall here at 61, 20. 6140 here, that so you got 150% rejection of a range, you got 200% expansion, you got 100% expansion. So all ranges are expanding at this point here, to this level here. So just tell me here that should be a bit of a wall for at least the next 6 months here.
So I think to resistance from many different.
Yeah, just don't see that many cycles here. I remember sort of Peter Eliadis years ago sort of talking about this sort of, I got it, but who do I even think it might have been the 07 high there? Was just sort of was saying there was so many cycles, all in compliments at the time there. So but I don't think he was expecting the pullback.
Pretty good.
Yeah, but look, the end of the seventh year does have a history of having some pretty brutal pullbacks. So we've seen some of I think maybe something like 8 out of the 15 largest corrections in history have come in the last quarter of the seventh year. So that's not a stat to be, or a period to be messed with, I guess. Look, I don't know why these things happen. All I know is that these cycles do replicate over and over again. So that seasonal cycles, we're just, creatures of habit. But yeah, look, this one here, I guess the interesting thing here is that we do tend to get this broadening pattern in the first quarter. We get weakness into March. It's pretty much every fifth year, the last 100 years has done it without fail here, which is kind of uncanny. So, but the good news is that oftentimes, like 85% of the time, the March low is the low for the year. And if it's not the low for the year, which is the low probability, then it will be the low for the half. Usually, if it's going to get surpassed, it normally doesn't get surpassed until the second half of the year, which is a lower probability. It might happen there because we've had a couple of good years there, but does suggest we'll pull back here and then bounce there. So it is kind of healthy to see a bit of rotation going on at the moment, Chris. And I don't think the market actually has pulled back that aggressively. We're seeing some big moves on stocks here. And I was pretty impressed the fact that we're only up about 300 points when we had the insurers up about 15% and the banks were up 10%, and yet the market was only up about 4%. So I thought that was pretty impressive. So,
well, something you and I have been talking about before recording is that strength that you've been seeing and noting for time. Just is it time for materials? Is it time for minerals? Is it time? And so that rotation fits in with the narrative that you're talking about with these market cycles and the highs and the lows. And as you said, you can't kind of explain why it happens, but anyone who's new to watching, you can go back and look for the last couple of years where Gary's used this and it's worked a real treat of timing the highs and the lows. Not always the full magnitude of it, but when we know, hey, look, let's tighten up our stops. Let's not take too many longs, and let's start to get long at the other end. Then that's been really useful along the years. But you're talking about the Australian reporting season that we are in the middle of now. You said there's more volatility. As a big black candle on the ASX, how certain are you, or what does it do to your current views of the ASX?
Yes, I think that like the rising sort of wedge or channel there, that's definitely going to be under threat here. That I don't think that's going to hold here. It looks like it's set up, reasonable pullback there. I've seen sort of some of those insurers and banks come back. I mean, look, to me, the banks are still really, we're to the point there where we're 3 or 4 standard deviations beyond normal sort of trading bands for those stocks. That's just from a fundamental point. They're not looking at any charts there. So,
and that's the big blue chip companies. That's not
that's right. So we saw some of those. I mean, we've seen plenty of the growth stocks as well. Trading at 100, 200 times. I mean, PNB, it's a great company there, but I don't know, multiple, Chris, was it close to 200 times or something? So, yeah, just, you're just going to, when the market does sort of break here, you'll see those stocks there. And we've seen, I think I've highlighted in the last 2 or 3 weeks, those leaders that have been leading the market here for the last couple of years, there's been quite a few big shooting star sort of patterns there. We're seeing big reversals on a weekly, big sort of volume, big selling bars coming in, just signs of distribution coming in. So I think on the XJR, I can see us, again, just in lines with how these sort of normal broadening patterns, and our market loves to do this broadening pattern as well. It's like, we do love the 50% correction. I just don't see that coming back here that far this time. That's a level that the index does tend to sort of get attracted to, and that's a big level for our market. That's obviously the old high. That's probably the worst case scenario I see, but more than likely we just tend to sort of do these little broadening patterns. So if we go just marginally higher, which we have done here, then I think we'll probably just go marginally lower there. So I think probably index comes back to 8,000 there, and that's probably the better level to see. And so far, like, I know we've been a little bit negative there last week, but I think the market's actually held up pretty well. So we're seeing pockets hold up as well. So I think it looks pretty handy. Yeah.
Nice. Well, the last one that we've got in the list is the Dow Jones, the oldest indices in the world. Similar sort of thing. I'm imagining you've got the ascending trend lines, which sort of comes to an end eventually. It has broken down under it. It did do it after pushing out to a high, broke that resistance level. It came down to the previous lows that it had, tried to shoot up and get through it again, failed, which was now on the underside of that vertical ascending trend line. And here we are now. So the red arrows tell me that you're going for something similar, maybe to slightly undercut that previous swing low and sort of follow suit with the NASDAQ and the S&P. Is that?
Yeah, no, yeah, bang on, Chris. Yeah, look, it might come back maybe because we've expanded 200%. Maybe we'll come back to the 50% or 150 there. So that's around 41. But look, maybe we might only just undercut that, maybe 41 and a half, something like that. So that's probably the range I'm looking at there. Might take a little while here, but just look, everything just points to sort of like a mid-March type of low here. So I don't think it'll actually be So I don't think it'll be impulsive, but I don't think it'll be corrected either. So I think it'll just be like an orderly sort of correction there. So yeah, won't get there in a couple of days, but I think it'll probably take 2 or 3 weeks, maybe 3 weeks of sort of downside here, just congestion, come back here, and then kind of reset there. But yeah, look, the market's probably due for this. To be honest, it's due for that type of fourth wave here. Sort of here's up bit of time here, and then it's got the ability to maybe push on and go to a new high after that, which is kind of fits in with our cycle as well. So you do need a bit of a pause normally, and these sort of stronger trends. So yeah, I think it's a good setup here.
Oh, so that's looking good for the Dow and conforming with those patterns and cycles that you talk about.
Yeah.
You have mentioned the banks. You've talked about this one for quite a while. You talked about valuations, yield, a few standard deviations away from normal on the valuation side of things. It's the largest company on ASX, and by a significant margin now, it's bigger than second and third competitors behind it, the banking space together. It's a huge behemoth, and when it falls and tumbles, it's going to hurt the index. But like you were saying, when it fell down, you were surprised how much the index wasn't down. So that's sort of part of the story. If we just look at the technical side for CommBank, you've got the chart here. Take us away.
Yeah, so obviously we've sort of gone from 165 down to like under 150 there. So we've had that $15-16 drop there. So 10% off the highs there. So I probably think, we've had a 10% correction. There'll be time to buy in here, but I don't think there's any rush with this one here. I still think this is sort of one of the more overvalued shares there. And if you look at that range as well, it's been a pretty aggressive, last sort of 12 to 18 months sort of higher here. So, if you look at those kind of typically weekly ranges like that, and something like a 25 to what they say is 2/8 or a third of the range would be considered a small correction there. So that's even if we're going to be only having a small correction, the CBA there, then you're looking somewhere between 130 and 140. I think the 50% correction there is around about 110 there. That really looks like the better level for me. That's where I think if we see this thing get sold off a bit more aggressively there, that's probably the region where we'll see some support here. It's around that 110 zone. So yeah, I just don't think there's any rush here with this. This is to me sort of one of the stocks that's probably got the most risk of downside there. So yeah, and so we're seeing here not everything's running together in the market, Chris, as well. So maybe this is sort of has sort of gone up when the market's had a few pullbacks as well. And considering it had a pretty decent pullback last week, I think the market didn't. Considering all the banks were off 10% last week, index was running off about half of that. So yeah, that I think that's just good signs to see that. So yeah, but I think there's no rush here for CBA. I think you're looking at least 130 here, and more than likely it'll probably eventually come back to 110 here. But look, maybe we get back to 130 in March, has a bit of a bounce back up with the rest of the market, and maybe as the rest of the market's going up again, it will come back down to 110 maybe later in the year or so. So, but it takes a little while here.
Well, we have seen that Amazon and other market leaders in the past take a considerable hit, but they're paying dividends, so that does help, give them some cushion. The other one that's been a market darling for some time is HUB24. Significant growth, funds under management going, assets under management growing. They're really taking a massive market share and gone strength to strength. Here's the weekly chart.
It's all the size of that bar. It's massive. So it's probably the biggest, it's the biggest weekly bar probably ever for the stock. So, so we can see that big wide range, big rejection of the high, big volume as well. Clear signs of distribution taking place there. So, again, I think we'll pull back here. And the last swing low there's around about 65 here. So I think we can see it, should come back to at least that level there. So, yeah. And maybe keep an eye on that sort of 50-week there. That's probably hasn't been that dominant in the past there. But yeah, I think this is it looks like it's destined to come back a bit further here. So that's just clear distribution sign there. Clear rejection there. So again, it's a bit of a market related stock too, Chris. So it probably goes up, for every 1% the market's gone up here, this thing's probably gone up 2 to 2.5% range there. And so it tends to sort of multiply with the market. So, if the market should pull back, sort of 5 or 8% here, then this is probably going to pull back double or maybe, or maybe triple that size there, just a high delta play there. So I just think you'll probably see this wind back here, some of these market stocks here. So, yeah.
Right. Well, another one that has had good days, bad days, in between days. So great trading, consolidation, good trading, consolidation, episodic pivot, game changer, as you said, drifts back, doesn't quite close the gap, and then rallies hard. Now it's in this formation. So
It's funny. I was struggling to find stocks that look quite constructive on the weekend there. So this is sort of one that I thought, look quite good. The weekly is sort of showing that impulsive rally off that deep low, and then what's probably more constructive is this little consolidation pullback is on a much lighter volume, and we saw a little bit of a VCP and that little tightening up there, and just got a reasonable volume profile as well. And so they have actually had a couple of FDA sort of fast track status notices come through for a couple of their products then. So there's actually been a second one since this report here. So yeah, a few things happening with that stock there. So yeah, it might be able to fight the tape here, but I thought this looked definitely one of the better looking charts out there.
nice. And Myer, well, the old department store that's doing better than it has in previous years.
Yeah.
For it's got a few continuously higher lows here. You look sort of that trend line to draw it in, a bit like a magnet, and then bounce off it.
Yeah, I just think this is sort of what I've been watching now. I think it's, I just think now it's sort of, but obviously the Power brand's been rolled into Myer there. So, that's quite profitable. I think it's roughly about a third of the size and about double the profit. So I think you'll see, a much stronger business there within Myer here now. And, if we look at, there's not many businesses that Salman Lu's bought that haven't got more profitable within a year or two of him owning them. So I know he's been been a shareholder for a while there, but I think now, going to be a lot more involved in this business there. So I can just see this business being a better business with the acquisition. And also I think that there'll be improvement in the earnings and the profit here longer term as well. So yeah, look, it's had a pretty good run here. I was hoping this one would sort of pull back into the range there. So just looking at the trend lines there, around that sort of 74 to 76 cent range looks like the sort of bottom of that sort of support line there. So kind of want to see it pull back here, just volume dry up a little bit. So that sort of looks the case here so far. We've had has sort of pulled back here, bit lighter the last few days there. So yeah, it's sort of looks like it's sort of coming back to a bit of a key zone for me. So yeah, it's just one that I think here. I think we'll look back in a couple of years' time, and this should be trading a lot higher here, I think. So I think the company is going to be a lot more profitable here. So I do like that one from a long-term perspective. But maybe the market will drag it back a little bit deeper, Chris. That's potentially, maybe it could come back a bit further. Maybe I'm coming in early here, but I just think this is going to be a pretty good business there longer term. So definitely one from a portfolio perspective I'll be looking at in that sort of mid-70s. Yeah.
Another one in this, it's a completely different space, Whitehaven, but has had its times of glory and then sort of gets sold off. Long congestion that it's had here. And then just, while it has been pulling back, that volatility's really narrowed a lot. And then reading your notes here, false break. How important is the congestion, tightness of volatility into a false break?
Yeah, just watching this one closely there. I know, look, the coal stocks can be quite cyclical there. They can really go through really positive years, transitioning period, and then they can go off the boiling and have some really negative. Obviously that the commodity price as well can go through those bigger cycles as well. So they can make a ton of money when it's hot, and then things can sort of go pretty sour when it's not. So got to be cautious with this one there. But it feels like this energy. I don't know, just feels like there's going to be, still pretty healthy demand for energy prices there. I mean, it's weird they're seeing some energy stocks near year lows, yet natural gas prices are sitting at year highs. So not quite sort of adding up here at the moment. Everyone's in a bit of an energy race as well, trying to, just trying to, shore up sort of things. So I just think it's pretty interesting here to be looking at there, because it has had that sort of, bigger ABC corrections, come back and retested this level a couple of times there. So it's just one that I'm watching there. I did see a bit of a false break, some volume coming up below there. So just, to me, I'm watching this one pretty closely there, because this is a bit of a key critical level for the stock. If it can sort of hold here and start to build here, then there's definitely one that could actually, potential have another substantial leg up here, in my opinion. So just haven't done anything there yet. Just looking for a bit more positivity there, but just some early signs there that it could be ready.
Well, you've talked about commodities, definitely coal, but soft commodities is something you've mentioned a fair few times in the last few weeks, and how difficult it is to get a pure play for soft commodities. Rural funds is not a pure play in the sense that it's one commodity. It has a decent spread across crops, yields, and commodities. So it's in the soft commodity space. What's attracted you to rural funds on the technical side of things?
Yeah, similar game. I sort of come back and obviously gone to that sort of false break there, sort of marginally low there. And again, we're seeing that really reversal and a nice sort of strong push there last week with pretty good volume there. So I saw some clear signs of accumulation taking place off that last low. So I thought, well, okay, this tightens up here, consolidates sort of positive manner there. This could potentially kick on here. So but the commodity space is pretty, again, you got a lot of agricultural prices actually trading pretty firmly there. I think if you overlay, I saw someone actually overlaying just agricultural price index versus the gold index, and they look almost identical. So everyone's talking about gold, yet no one's talking about ag prices. So
unless you're buying coffee or chocolate, you want to see the prices.
Yeah, look, I know it is much harder to position for ag stocks there, but maybe this is the way to go here. This is I think rural funds group looks pretty interesting here. Actually, obviously, financially pretty buoyant. So this has actually been going down while the financial sector's been pretty robust there. But I think maybe it can start to run with some of the agricultural stocks.
That could be good to see. And what you've got is the S&P 500 index, which we mentioned earlier. You're talking about the 50-year blueprint. You've marked this one up considerably, so you can sort of walk us through these periods that you look for. And this is something that we echoed before. Gary's done the blueprint. We'll put a link on screen so that you can go and check that out for 2025. But this is something that Gary's looked at for many, many years, the history of the cycles and how to help him position portfolios and his own trading to know when the tailwind is with the market and when there's a bit of headwind. So that's sort of my take on it. But Gary, it's your chart, your research. What is it that you want to share with us here?
Yeah, I just thought this was sort of look like the closest fit in terms of like how the market's actually run up into this year. So obviously we've had a bit of an end of year run up there. So this one's again just sort of classic broadening. So this one's had a probably slightly larger pattern in that pull back to Jan and then expanded out to early March and then came up to April. So this one's probably a little larger than most. But then obviously you'll recover there for the rest of the year up into August and then pull back in October and finish the year there. So that's a sort of common in terms of timing. That's the common sort of setup there. This one's probably the latest cycle. So this normally happens. This normally happens a little faster, a little earlier. So normally is sort of finding a low there. Probably I think mid-March there. I think if we look at that first, I think the first chart there. I think I had all the dates in there. I think most of them are around that middle of the March. The few
24, 14, 18, 7, 15, 29, 7.
Yeah, so 2 on the 14th, 15, 18th. So, keep an eye around that mid-March, and then there's a couple sort of late March as well. So probably be sort of watching around those dates in particular. But to be honest, we're probably just looking for a marginally low there. I think those indexes sort of pull back here. If we go back and look at, those previous other periods there, Chris, they're just littered with them. I don't know why. Yeah, it's just a strange sort of setup there. It's it's like the midterm year, those October lows in the we sort of showed that every 4 years in October midterm year lows like a magnet for the market there. There's like a broadening pattern magnet for the first quarter of the fifth year. So just sort of something which sort of tends to sort of and look, I think because you've had a pretty good run, there's normally sort of the end of the second year, maybe start of the third year is sort of where typically markets find a low and they sort of build out of that. So you've probably had a couple of good years already coming into this window. So you just due a little bit of a breather in the start of the fifth year so you can finish the year strong here. But so depending on how strong that year's been, it sort of is how strong the year finishes, I guess, as well. So it's like we've had some pretty couple of big years there. So I think everyone's kind of positive there, but tempered positive. So yeah, it's funny that the most common view out there is actually quite a rational view, which is strange because it's not always the case. The most common view is normally an irrational. We're not such a rational on it, and rarely works out. So, but yeah, I think everyone's pretty kind of positive there. But yeah, you watch the market will expand here. And if we go to a new low in March, you watch probably everyone's going to probably freak out. Think, bear market's on here, and that'll be the point where we catches everyone. So everyone will probably, if everyone turns pretty negative at the mid March if the index goes to a new low, then that's exactly what we want to see. So I want to see everyone turn really negative after it moves down because that's probably when you can recover there. So,
and I imagine from your momentum trading and adjusting portfolios, it's probably going to be this purple period where you'll be most active, looking at rotation in the market, looking at those setting new highs or setting higher highs in contrast to the market. It's just undercut the low.
Yeah.
Is this going to be a real focus period for you, this purple patch?
Yeah. So we know, Chris, that particularly from a momentum point of view and even from a performance point of view, that the stocks that hold up the best here in the next sort of 2 or 3 weeks are going to be the most important stocks to be long here because they're the one, we've shown there sort of, if we go back to October 22, even October 23 as well. I think March 23 were probably the 3 dips. So if you look at what stocks were actually showing relative strength at the time, maybe making a high low rather than making a new low, those stocks there, probably 80-90% of them went on to have some pretty strong runs there. So over the next 2 or 3 weeks here, we've got to be looking at what stocks are holding up the best here, which ones are sort of showing some strength. So as opposed to sort of making new lows, which stocks are making higher lows. And those are the stocks that we want to be sort of looking at here. So I think, it all sounds a bit negative there, Chris, coming back there, but we're only looking around about 3 or 4% lower on, I think, our index and maybe 4 to 6% lower on the US index. It's not, so we're saying pullback there, but not saying big. We're just sort of saying we're sort of just healthy correction there. So could be where we should be.
One fairly bad week, and we're only a week away from the start of March, so it's possibly 2 moderately bad weeks, and we could be in that period where the history shows the reversals can happen.
Yeah, so if we got a mid-March low here and go to a slight, 3 to 5%. Bit further down here, and we just go slightly lower than the last low, that's going to be perfect. So that's the ideal setup. Look, it doesn't always go to plan, but yeah, definitely. So far, it's showed resistance at the key level there. Took a little while. Had a few goes at that level. It's actually, probably had 2 or 3 attempts at that sort of at those expansion points. So what I refer to as a technical wall. Even I was looking at after the second or third attempt thinking, maybe I'm wrong here. Maybe it's just going to push through, but we definitely got the rejection there last week here. So we'll get a clear sort of move down here. So I just think you'll wind back here. So hopefully mid-March should be mid-March low here, just a little bit deeper here would be the perfect setup.
Nice. We're looking for the perfect setup based on a lot of research. If you want to learn more of the research that Gary's talked about, inflation, 5th years, the 2025 blueprint, There's a playlist to the right of that trader education. To that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.